2 weeks ago, I talked about a checklist I used to identify when the market was bottoming. See, at the time, the market had been going down. I didn't see a bottom because I was being dispassionate about things I look for. I said there could be more pain to come. We didn't have enough checks. The market was still too high to me. It was too perilous. Didn't want to put any money to work from a charitable trust, still taking money out. Now, though, especially after the total despair of the last hour today, I'm actually feeling a little more confident. This is what a bottom could look like. It's murky down there. Let me walk you through the same dispassionate checklist from 2 weeks ago, because I know it's difficult to look through the negativity and see something, anything constructive, but we must do that together. And that brings me to item 1 of my checklist. Before the market can bottom, we need to see a sickening level of negativity. Looking at the tape should make you want to, yes, puke. And this market certainly felt vomit-inducing as we went into the close. Believe me, the run to the exits was visceral. It was excruciating. Even before then, the American Association of Individual Investors weekly survey had some incredibly weak numbers. Bulls had fallen from 25 to 21%. That's shattering. Bears had risen from 38 to just under 47. This is an astounding level of negativity. One of the few times we've ever seen it. So you know what? We're checking that box. Okay. Now, emphatically, even as that scary decline in the stock of Netflix was at the end after tonight, there'll be more fright tomorrow. Believe me, that carries over. Second, are we oversold? Now, you know I watch that proprietary S&P oscillator like a hawk, right? That's what I use to measure it. I need something, again, dispassionate. Keep thinking that word. Now, I did an oscillator explainer this morning for the Investing Club in my new morning meeting 10:20 a.m. video, which people are telling me is important as what I'm doing in any other point in my life. So I need you to go to this 10:20 video only for club members. I talked about how the market was barely oversold 2 weeks ago, and so therefore it was too early. This time, though, the oscillator has plummeted. Now, it's fallen from +7, where everybody's too bullish. It's an extraordinary positive number. You have to do selling, all the way to -4. But it is not yet deep enough to prevent another down day. It's getting there. -5 is the level where you need to see, where you have to hold your nose and buy. I'd say we're here, okay? Getting there. We have to go to -5. And right now, tonight, we're -4. Third, have the analysts thrown in the towel? 2 weeks ago, we had almost no towel losses. If anything, they dug in their heels. Today, though, they threw in towels all over the place. If you walk by Wall Street, you're probably hit by one. Case in point, AMD. This semiconductor stock, like almost all the semis, has been beaten to a pulp, falling from the 160s to 121 today. An analyst downgraded it. Hey, I get it. Says business could slow. Sure. Wait a second, though. I mean, now we throw the towel? I don't know. Stock lost another $5, like I said it would do. 5%. I said it would do that in Squawk on the Street. I said, listen, it's vulnerable. Vulnerable. But at what point? Is it down 60 points from its high? Tempting? Okay. Then there's Ford. Like AMD, we saw some Ford, sold some Ford for the investment club at much higher levels. Hey, we're not idiots. This morning, an analyst raises his earnings estimate for Ford. So far, so good, right? But then downgrades the stock from buy to hold, even as it had fallen from 25 to 22. Because he thinks it's too early to start saying good things. I think you're going to get a good opportunity in the teens. Yesterday, an analyst downgraded Cisco, saying that its business is cool despite the increase in orders. That's a measure of the future. These are all signs of a bottom. Towel throws. Today, CNBC.com broke this terrific story about how Peloton's halting production of treadmills and bikes, demand and waning. Despite the inexorable decline in the stock, there's still plenty of buys on the street. That means we're going to get more towels thrown tomorrow.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.